What's going on, traders? Hope everybody is having a great long weekend. Happy Memorial Day. It is Monday, September 4th, and we'll be doing an analysis of the S&P 500, the Spider ETF. We'll take a look at some areas where we may want to engage the market and manage our risk, and what to potentially expect coming into the market open on Tuesday here. A lot to go over here, so I really want to thank my subscribers and listeners, watchers, for joining me every single day as we prepare for these markets, and as well remind everybody that this video is for educational and entertainment purposes only, in no way should be viewed as financial advice. So with that being said, let's start to look at some charts, some economic data that we may want to keep an eye on, and then our daily plan. So let's get into it here. First, let's start with the economic calendar for this week. Factory orders on Tuesday, September 5th. Not really something that is interesting to me. Keep an eye on the S&P Services PMI here, Wednesday the 6th at 9:45. Keep an eye on that. Beige book as well. Sometimes can move the market, so we'll watch that at 2 o'clock. But Thursday, definitely going to look at 8:30 initial jobless claims. We do have Harker speaking at 9 o'clock before the market opens. But at 11:45, we have Goolsby speaking, and then at 3:30, wow, they're really giving us the full the full gamut here. We have John Williams speaking, a New York Fed. Then we have Bostic at 3:45, and then I guess they speak again at 7, but markets will be closed. So Thursday, let's definitely keep an eye on what is going on with these speakers going on, throughout the day. Friday looks like a pretty quiet day, but we do have Fed President Daly speaking at 11 o'clock. So keep an eye on that, and I guess consumer credit as well at 3 o'clock. So, all right, that's all we've got as far as economic data. Let's take a look here at how the sectors performed this month. The star of the show really has been energy, up about 3.7%. XLV, which is healthcare, usually a little bit more of a defensive sector, had a nice run in the start of the month, but actually ended up finishing in the negative. But we do like to keep an eye on healthcare, as it is one of the heaviest weighted sectors actually in the S&P. I think something that's worth noting here, XLK, our technology sector, making a impressive rally towards the end of the month. As you can see, I'm highlighting here the sector, but I can't go over, but you can see from the 24th it just rallying there into the end of the month, getting up higher, and that's more of obviously a risk on type of environment or sector. So we want to keep an eye on how tech, as it usually propels the market, how that is doing. But the other interesting thing to note here, XLU, which I believe is consumer staples, really not doing well this month, down almost 6.5%, a little bit over. And that, technically usually is a bit of a... XLU is materials. Is utilities, and XLP is the consumer staples. But both of those, what I'm about to say, both of them are in the negative, and both of what I was going to say leads for both of them in that they usually are more of a risk off type of trade. So seeing them sell off here towards the end of August could show that market participants are willing to be a little bit, allocate maybe into a little bit more of the risky sectors. But most of them have finished here in the negative, as you can see on the side, and I will post this up onto my Twitter for you guys. Another thing I wanted to mention before we get into the charts is the seasonality in the S&P here, everybody's talking about it. Look at September. Since 1928, it has had a average return of a little bit over -1%. So everybody is kind of expecting this. So we'll see if it kind of cancels itself out. But I think this is a worthwhile backdrop to keep in your mind as we approach this historically weaker season. Now we do have the Apple event. Now Apple's been pretty on a nice run in the last few days, propelling the markets higher. But we do have an event. I believe it's on the 12th. Or maybe it's the 15th. I just have to double check. But Apple may run into that big event with the iPhone release. So we want to keep an eye on that and how that affects the market. But we're going to need more than just Apple. But certainly Apple is such a high weight stock in all the indexes that it can certainly propel the market. So we'll have to keep an eye on that. But let's see if this seasonality does start to play off. All right, so let's look into some charts here. We're going to look at the monthly chart starting off, and just off the bat, we had that retest of the megaphone breakout. We retested, also came into this supply demand area, and buyers came in. You can really see that buying pressure coming in and printing on this monthly candle, although we did close the month red. Overall, we did clear back over that 444, which was key for the bulls, as well as this the top part of this area of previous supply liquidity here over 447 as well. So nice close there for the bulls, but we are at a really interesting spot here. Supply liquidity now just above here in the 455 456 area. Markets did try to attempt to get into it at some point in this month, but we're not able to continue. So we'll have to see what they have in store for us. Another thing I wanted to mention, at least here on the monthly chart, that we do have starting to get a little bit of the overbought readings here on our Momo. Of course, it can get way more overbought than that, as I always mention, but we want to keep an eye on these type of readings when we are on these longer time frames. It's very important. So all right, let's break it down and come into the monthly chart, or excuse me, the weekly chart now, see if there's anything else that we can talk about. I think right here, we are still back above the 920 and 50 on the weekly, no problem. Nice powerful candle here, taking out nearly 50% of the move. It took the bulls, it took the bears, how many sessions, right? How many weeks to get back, and then mostly like half that time we've retraced that nearly that entire move back up, really showing that overall strength in the market. And we've been talking about that. We were talking about the potential retracement, but big picture still, it's always been bullish. And until we really start breaking down, there's really no bigger picture for the bear case as far as the technicals are concerned. Sure, there are a lot of maybe macro reasons to be potentially bearish, but as I've said on some of these videos before, these macro trends or and data points can take a long time to play out, and no one knows how long they're going to take to play out. So if they even do. So it's hard to really base, short-term trades or, even monthly trades just based on macro data. And I think that's where a lot of some of these perma bears get in trouble in their trading. Most important thing is price. That tells everything. So not too much more that I wanted to go over here on the weekly. So let's look at the daily chart and see if there's anything else that we want to go over here. We've recaptured the 50, the 9, the 20, of course, but we'll say, where do we close it? 451.19. Yeah, 451.19. We tried to break and close over 452. We're unable to do that, but I think the biggest thing here, at least, that kind of strikes me is that how far we are getting a bit extended again from the 9 and then the 20. So could we potentially be in the works for some type of pullback to retest maybe that 446 area, that 445.50 area where they are sitting? That's something we want to watch out for, a little rebalance, and then we make another move up higher into the end of the year. But we'll see. All right, not too much else I wanted to go over on this chart. So let's take a look at a couple of other macro charts, and then we'll close it out with our plan for Tuesday, some levels that we're going to be looking at and potentially work with. All right, we're going to look here, just taking a weekly view though. Again, we're going to be watching this trend line here, big one on the macro, and you can see here we have not completely recaptured it on the week. Gonna bring it down there, hitting up against this area, so very tricky spot for the bulls. The risk to reward for me, to open up new long positions right now is not very good, in my opinion. As you can see, we're really at all these big areas of potential overhead supply. And we have been making a move now. What do we have? 2 green weeks. And if we go back to the daily chart really quickly, how many green days did we have a row? I mean, we had one red day, barely, in these last 2 sessions, but it was 1, 2, 3, 4, really strong move here. So you don't want to be chasing this upward move, in my opinion. If you're still bullish, just wait for that pullback, and then we can talk about initiating some longs to the upside. But yeah, it's just the risk is not there at the moment for me. But let's see. Well, it'll be very interesting to see if we close this next week over this big downtrend, right? All right, let's take another quick look at a bigger picture. I don't think I have anything to go over on the fibs here. Nope, not too much here, I guess, other than to say that let's see about interesting kind of confluence here on the 23.6 with the daily 9, which is sitting at 446.60, and this is sitting right here at 446.25. So pretty much in that zone we want to watch, because if we do start selling and breaking under that, we can anticipate bigger picture sells coming into the market. So let's keep an eye on that level. All right, one more bigger picture chart to go over and just see where we are on our trend lines. If there's anything to report here. Not really too much, other than, we are now, we basically closed right on this next bull pivot here. So, the other thing is we do have another trend line right here that we've had multiple reactions in. So we're going to see, again, a dicey spot for the bulls, but it doesn't mean that they can't plow through. They have shown their resilience, I should say, through this downturn that we have experienced last month. So, all right, now let's go into some of our charts for tomorrow. Some areas we're going to look at. Let's take a look at our day trading fibs really quickly. Oh, looks like I didn't update the areas yet, but I'll fix that later. Okay, so the biggest thing here that we're really going to want to see the bulls hold on to, at least from the Fibonacci perspective, is going to be this 618 here, this 449 30 area. Want to see that hold. You can see multiple times that price has come into it and had some type of a reaction, so want to see that hold. If that breaks, we could look for more selling, but just below, we're going to want to keep an eye on that 448.30 as well, about $1 lower. I mean, you could maybe get $1 scalp on some type of a trade there, but want to watch that as well, because that's going to be the next area that we are going bulls are going to want to potentially defend. but and an area where we could, look to take longs. But for me, really, as long as we're holding 448, I think, that's going to be the main area, the closest, area that I want to keep an eye on, as well as that 449. For me, it's going to be really tough to have a bearish trade unless we break under this 50%, right? We want to watch this high because this was a big breakout area where we had a real big turn in the market right here at this 50%. So that's really where I'm going to start to get bearish for trades in the downward direction. But until we break that, really, we could see, we could still break 449 and sell into this and then bounce up higher. We could just sell into 449.50 and then come up higher. They could just defend the 448.25 area and then we bounce up higher. So, those areas I'll be watching at, but, if they do start to break, the 449, they say, okay, that can be a warning sign. Break 449.30. We break 448, okay, another potential warning sign that we're going to be selling. But once we break this 50%, okay, then I think we've got a clearer path for a little bit of retracement. So that's what I'll be looking at for these fib levels. Now let's get into our balance levels. Take a look at some of those. Before we do that, I was wondering, well, maybe I'll just take a peek at it after. I wanted to take a look at VIX and TNX, and we'll close out the video with that perhaps. What are we looking for here? Okay. All right. So, you hear a lot of these same levels again. You can see though how we bought up right into, we opened right coming into this balance, retesting the back of it here, couldn't get over, gave us the short down, then we kind of just hung out here right at this 450 level, and really going to be watching that as well as a key pivot, not only psychologically, but we can see how many times this half gap was supported yesterday. But really, as I was saying, the 448 is really what I'm going to be watching to be held by the bulls. But if not, then it's really only $1 move down, but you can still take a look at 447 area as well here for a possible move. But as I was back to the upside. But as I was saying before, we really want to watch this breakout here. So that's going to be what we're going to see if the bears can push under that. But I'm interested still in dip buys, like I said, pretty much into all this up into 447, and maybe 446 is the last stand. But after that, we'll be looking for those lower prices into 45, 50, 445, and then if we get under that, 444, that area does interest me for a potential long. That's going to be that retest of the breakout on the daily. So that would be an area where I might consider going long after getting out of any short trade that I may be in. Because like I said, if we break this, certainly we break this 446.25 area, I'll be looking more towards that short side. But what if we wake up, markets are up tomorrow for some reason, then we're going to want to see acceptance over basically 454, 453.40. Want to see that area hold. That's going to give us the opportunity to trade back into this half gap basically at 455, and then over that we've got a chance up into 456, 456.45. That area would interest me in a potential direct short trade, but we have to realize, at least right now, the direct short trades are going to be even more risky because we are back in a bullish trend, a bullish environment. So if one are to take a counter trend trade short, the safer move would be look above and fail type trades instead of going directly and attacking the bid, in my opinion. So and this is kind of a decent example of it. But we've studied them here before. I mean, here's actually a better. I was going to look at this one, but here's a better one. Where we looked above, and then you can see, at least on this one. This one took a while to kind of play itself out. You needed to really be patient, but Here it tried to break out, it could not, and then came back down, came back up, retested it. That's where you would enter the short trade, and then down it goes, right? So look for things more like that, in my opinion. Anyway, yeah, so I think we went over that. So yeah, for the bears, would be potentially interested for the short up here. So that is one thing I'll be looking at. But if one was so inclined, of course, shorting against any of these balances on retests certainly can be, up for potential grabs here. Maybe we trade up and we do a double top or a little look above and fail, and then we trade back down. But first step for the bears, really, it's going to be hard to get too bearish. Unless at the very minimum, we're giving up the 448.50 area. That they got to get under that. Then we can start to think about it. And then, the top of this balance could be an interesting spot, but for longs, like I was mentioning before. But we can really start talking about those short trades under 446.25, basically. So, all right, guys, I think that's pretty much everything I wanted to go over. One thing I did want to close on was TNX, because that has been the talk of the town and has cooled off a bit. So I'm still kind of watching and monitoring the relationship that it is having on the markets. But the Treasury Index here has really been a thorn in the market side as of late. And let's zoom in here and take a look at what we've seen transpire. We had basically a double top, and here's pretty much another good example of a look above and fail. Looked above the supply liquidity, couldn't do it, came back down, didn't come up and retest this top, but retested this half gap here, and boom, down she went. But really, the one thing that we have to really kind of look at as far as that structural perspective, and not to really forget, because if this goes up, this is going to put pressure on the markets, right? Now, yes, it's gonna have to get over 42 here, really, to have a chance to move up higher. It could just kind of be stagnant here for a while. We don't know. But the one thing that I did want to mention as far as structurally is concerned, that if we think that this, or if someone's inclined to think that the party is over for the 10-year, is okay. We've got our swing low here. What do we have here? Lower, higher low, higher low, higher low, higher low. So overall, directionally, we still are in an uptrend. I hope everybody can see that. So until this structure really has broken, I don't think that it's fair to start to say that this problem has been alleviated. So you can really see here this upward channel right now in the index. So something just to be mindful of. And I'm going to continue to watch this as it has really been a sensitive subject for the markets right now. So, all right, keep an eye on that. I hope everybody enjoys the rest of their Labor Day. Let me know what you think's in store for September. Are we going to see this historical seasonality come true? Are the bulls going to do something different? Yeah, so that's all I got. Let me know what you think below in the comments. Again, thank you so much for joining me on this edition of our analysis and preparation. Remember, a prepared trader is a profitable trader, so plan your trades, trade your plan. Again, I wish you a great rest of your day, and we'll see you on the other side. All right, take care.